Hello, my name is Maximillian Fleischauer, and today I'll be talking about electronic money laundering. First off, what is money laundering? Money laundering is the process of disguising the proceeds of crime and integrating it into the legitimate financial system. After being laundered, it becomes difficult to distinguish dirty money from legitimate financial resources, and the funds can be used by criminals without detection. There are countless methods of money laundering. However, every method of money laundering can be broken down into three basic stages: placement, layering, and integration. Let's talk about the history behind money laundering. One of the most notorious gangsters, Al Capone, created a profitable empire of organized crime. When he was finally put on trial, the most he could be convicted of was tax evasion. Capone earned $100 million per year. That's $1.4 billion in today's money. He did this through illegal gambling, bootlegging, extortion, and brothels. This would have served as evidence of his crimes, but authorities could not find the money. Capone and his colleagues had hidden money through various businesses whose ownerships could not ultimately be proven, like cash-only laundromats. In fact, those laundromats are part of the reason for the name of this activity: money laundering. But Capone was not the first to launder money. Throughout history, merchants hid their riches from tax collectors, and pirates sought to sell their bounty without attracting attention. What are the three basic steps to money laundering? The first step is placement. In this step, the initial entry of illicit money goes into the financial system. In this step, illegally obtained money is converted into assets that seem legitimate. That's often done by depositing funds into a bank account registered to an anonymous corporation or professional middleman. This step is where criminals are most vulnerable, since they introduce massive wealth seemingly out of nowhere. The second step is layering. Layering is the process of separating the funds from their source, often using anonymous shell companies. The second step involves using multiple transactions to further distance the funds from their origins. This can take form of transfers over multiple accounts, or the purchase of tradable property like expensive cars, expensive artwork, or real estate. Casinos are often used and popular venues for layering, as large sums of money change hands every second. The final step is integration. Integration is when the money is returned from the criminal to a legitimate-looking source. In the last step, this allows clean money to re-enter the economy and to benefit the original criminal. The money can be invested into a legal business. Criminals can also claim payment by producing fake invoices or even start a bogus charity and place themselves as board of directors with an extremely high salary. How has technology affected money laundering? Technology has made transactions more anonymous and depersonalized through online banking institutions and peer-to-peer transfers with mobile phones, for example, Venmo and PayPal. Criminals also use technology for their money laundering through proxy servers and anonymizing software. This makes it harder to detect criminals and their money laundering schemes. Cryptocurrency and websites are also used as methods. Bitcoin, one of the most leading cryptocurrencies, is used by criminals because of how anonymous it can be. Virtual gaming sites, gambling sites, and online auctions are also methods for money laundering. What is the effect of electronic money laundering, and who is affected? Electronic money laundering decreases the government revenue by reducing their tax revenue, as it becomes difficult for the government to collect revenue from related transactions. It also erodes the financial sector. The financial sector is a low-cost vehicle for criminals to launder their funds. Large funds being poured in and out of financial institutions undermine the stability of financial markets and harm the reputation of financial institutions with their stakeholders. It creates economic distortions. Money laundering impairs development of legitimate private sectors through supply of products priced below production costs. This makes it difficult for legitimate activities to compete. It also has socioeconomic costs. As dirty money is integrated into legitimate funds, they are used to expand criminal operations and finance new ones. This transfers economic power from the government, market, and citizens of the nation to the criminals. Businesses, governments, and the people of the nation are affected through inflation and economic instability because of money laundering. How can you protect yourself? There are many ways to protect yourself from money laundering. The most important is to learn about money laundering schemes. The more you know, the easier it is to prevent. Do due diligence. Establish a formal anti-money laundering policy. This is important for businesses. For everyone, it's important to maintain your privacy. Criminals can use your personal information to help aid them in money laundering. In conclusion, money laundering is incredibly difficult to detect and creates a negative impact to the economy. With the introduction of virtual currencies, offshore banking, the darknet, and global markets, electronic money laundering is more complex and harder to detect due to anonymity. It is vital to protect yourself and to carry a duty to report money laundering schemes if possible. While there is no way to determine how much money has been laundered, some organizations estimate hundreds of billions of dollars being laundered on a yearly basis. Today, the United Nations, national governments, and various nonprofits fight against money laundering. Yet the practice continues to play a major role in global crime. Thank you for listening. If you're interested in researching more about this topic, here are some resources that you can use. And thank you.